Can Tesla reach a market capitalization of $4 trillion? And with that, welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And with the upcoming Battery Day, I took a deeper look at Tesla and the valuation of Tesla and will give my opinion on this high flying stock. So as we all know, Tesla just rises, and lately over the last year it rises immensely. This is just a high flyer, the high flyer on the stock market, with all the EV vehicle hype. And so you could make 10 times your money in a short term in the last year or 18 months or so. And so Tesla became a dollar printing machine for the stockholder. And the question becomes, can this just continue like that? And therefore, normally I do a discount cash flow or discount EPS method just to find a fair value of a stock, and just try this with Tesla. And if you try this with Tesla and you take my discount rate or my expected return of 12% per year and the current EPS of 39 cents, you need a growth rate of 70% of the EPS for the first 10 years and 20% for the second 10 years. And then you come to almost a fair value of $450, which is close to the current price. So this is, of course, incredible. It's incredible to think about that a company can grow over 10 years 70% per year, and then for another 10 years 20%. So maybe this discounted earnings method is not the right thing here to calculate the fair value of Tesla. And as always, this method is very good for very stable businesses, for slow growing businesses, or predictable businesses. For the high growing businesses, it has really big problems just to get to a point. Because, of course, with the immensely rising revenue of Tesla, at one point also the earnings per share will rise drastically, and so the 39 cents we take now is maybe not, we have to calculate with. So then try another method to find out if Tesla is over or undervalued right now. And this is to put the current market capitalization into perspective. And the current market capitalization is around $412 billion. Only that number is incredibly high for a company that is just slightly profitable. But anyways, it's 412 billion. And then just try to calculate with that. And when we calculate with that, and just keep in mind that we want a return of 12% per year for a long-term investor, let's say for the next 20 years, then the market capitalization of Tesla had to be in 20 years $4 trillion. 4 trillion. That's unbelievable. That's shocking. Or just to put it in perspective, $4 trillion would be the current market capitalization of Apple, Amazon, and Facebook together. Just think about that. Or, in other words, $4 trillion is almost the GDP of Germany, where I'm from right now. And think about if Tesla is maybe over or undervalued. I'm very sure for most of you that join Tesla or stay with Tesla or think about to buy into Tesla, 12% per year sounds not so sexy. So let's do this with the 20%. If you want to have a return of 20% over the long term, Tesla needed to have a market capitalization in 20 years $15 trillion. 15 trillion. If you remember this list, this is almost the GDP, the current GDP of China, or half of the market capitalization of the whole S&P 500 right now. So is this impossible, or is it possible? And of course, in a crazy time like this, everything is possible. It's very possible that Tesla will double in the next 12 months again. Who knows? Nobody can predict the market over the short term. And of course, with the best entrepreneur of our time, Elon Musk, of course, almost everything seems possible, and maybe just the sky is the limit, or even not that. But for me, it's not very likely because, of course, Tesla have a great market position in the global plug-in vehicle. It's the leader by far, and also, or even more, in the 100% electric vehicle section. They are the worldwide leader, and really, really by far the worldwide leader. But if you look the opponents in the sector, and there are a lot of big companies, then you know there will be a lot of competition in the future. And most of these, I would call it old automotive companies, really sleepwalked for the last decade. They awake already, and so the competition in this sector will be bigger and bigger. It's more likely that the big automotive companies, even driven by politics, in Germany, for example, uh, will close the gap. I don't know if they will ever get Tesla, but they will close the gap. And the competition in this sector will be much higher. And with that, also Tesla will maybe not lose the market leader position, but it will be not with a big gap like that right now. Keep that in mind. And so it seems to me, even if Tesla is a great company and Elon Musk is a great person, a great entrepreneur, it seems for me just like a normal bubble which can burst at any time. And then you will say, yeah, but this time it's different because this time this is not a bubble and everything is fine and the electric vehicle is the future. And yeah, and I heard this a lot of times with every bubble we had, and every bubble bursts at one time. And then I remember every time the dot-com bubble, then I remember especially Microsoft, one of the greatest businesses around. Even at the start of the 2000s, they are very profitable. If you had invested in the peak of the dot-com bubble, you had to wait almost 17 years just to come to a break even. Keep that in mind. That's the danger if you invest in a bubble like that. And for me, it seems like it's a bubble like we have it a lot of times. And this is despite the fact that Tesla is the market leader, that it is a great company, that they have a mastermind with Elon Musk. But a bubble is a bubble is a bubble. And so Tesla for me right now at this point is more a gamble than an investment. That's it for today. If you liked the video, give me a big thumbs up, subscribe to the channel and ring the notification bell to never miss another video. And then we will see the next time with another analysis of another stock out of my watch list. See you then. Take care. Bye bye.